the crypto companies were levered 20 to 1, 30 to 1, 50 to 1. It was very common for in the crypto in the height of the crypto era, people would give you $1 billion loan for 800 million of yo-yo token as collateral. Okay. You can't get a loan to buy Bitcoin in the traditional finance market. So for example, I can't sell a bond and so all these Bitcoin treasury companies, they're not getting levered up. They're raising equity. They're not raising debt.
In order to set the stage, Michael Saylor provides an explanation of Bitcoin, wealth, and digital assets using straightforward language. As a continuation of this, the Chief Information Officer of Bitwise, Matt Hogan, disputes the traditional four-year-halving cycle and suggests that the next significant uptrend for Bitcoin may not peak in 2025, but rather in 2026, when block rewards are reduced. Their immediate impact becomes less significant. Additionally, macroeconomic factors like as decreased interest rates, political pressure for reductions, and investor flight from bonds might potentially drive Bitcoin's price higher. With the addition of more stringent regulations and an increase in the confidence of institutions, Hogan anticipates a gradual and long-lasting boom rather than a brief and dramatic rally.
I think everybody can do what they want with their estate. And there are a lot of, that comes down to a system of values. Do you want to endow a children's hospital in your hometown while you're alive? Do you want to endow a children's hospital for the next 1,000 years after you're gone? Do you want to trust someone else to distribute your money, pursuant to some charter for the next X years? All of those are different possibilities. I've seen them all. We know what the Rockefellers have done. Ironically, Rockefeller gets criticized for things that were done by people that are 6 generations past when he actually contributed the money. So I think there's no doubt that sometimes big charity goes awry. Do you want someone 1,000 years from now or 100 years from now to use all of your money as they see fit? What if I were to tell you they were going to use all your money to destroy Bitcoin because it was politically correct at the time? Right? Yeah, you take a lot of risk when you delegate capital. And so I think you got to consider that. Right? But it's a value judgment. It's a principle judgment. So I'm not going to tell other people what to do. I'm going to point out that the logic of burning your keys when you die is that you've made a pro rata distribution to everyone in the network. So you could reasonably infer that you put all of your life's force or energy behind the support of the thing you believe in at the time you did it. And then should the network become corrupted or go awry, it's not your fault. Mm-hmm. On the other hand, right? There's a lot of large charities that have gone very, very badly awry, and you could probably identify them if you thought long and hard enough about it. And then if you were to ask the person that endowed the charity, did you mean for them to do this? That person would always say no. No, I didn't think that I was creating harm. The joke, of course, is there are literally people saying that the medical industry, the modern medical establishment is what is the word? Is doing damage to the health of the people it treats, right? Has been corrupted. And they blame Rockefeller. Rockefeller lived to 99 3/4, and he believed in homeopathic treatment. He didn't believe in medicine. Like, he didn't believe in doctors. He didn't trust them. He didn't believe in medicines. He didn't believe in surgeries. He ate simply, exercised every day of his life, outlived all of his doctors. He outlived every single medical school faculty member that he endowed. And he's blamed for the transgressions of the medical establishment that he sponsored. And the truth is, probably a lot of stuff that he endowed turned out very, very well. And probably there's someone 4 generations down the line that misused the funds. And you just have to ask the question, what do you want your legacy to be? Mm-hmm. Yeah, I mean, you got Satoshi's example, right? What did Satoshi do?
Right.
I mean, the real issue is, can you find fault with it? If Satoshi had left his money to support a particular cause, don't you think that like half the world would be angry about that cause right now?
Definitely.
In fact, if it was a liberal cause or a conservative cause or American cause or a not American cause, it would be tearing the Bitcoin community apart, because people would be very angry that Bitcoin was being used for this thing they didn't agree with, right?
Yeah, of course.
In order to make the network work, you needed to have an asset which is self-referential. Like that is, we pay the miners with Bitcoin, right? Every 10 minutes. We don't pay them with fiat. And so if you don't value the Bitcoin, you wouldn't mine the network, right? You wouldn't protect the network because you're getting paid. And so the logic was, we want the people that protect the network to have a vested interest in making sure that the thing they're getting paid in is not corrupted. So in a way, if you spent your entire life defending the network, growing the network, and you managed to accumulate a lot of capital, you know, what is the least risky way for your life's work to continue in perpetuity? It's pretty much to burn the asset on the network, right?
Yeah.
Right, which is what Satoshi did. I mean, so Satoshi set an example, and he is like, what's the famous quote? Lost coins are a contribution to everybody else. They make everybody else's coins more valuable.
Yeah.
Right?
I mean,
but it was kind of a classic understatement. It's classic understatement. It's like, you know, if the thing that you love, you imbue with your estate. You know, so you're a father, you love your kids and you want to give them something, right? You're a patriot, you love your country, right? You're devout, you love your church. You know, all you got to do is walk through any cathedral in Europe, right? You see all the chapels and you see, you know, very wealthy people contributed their entire estate in order to finish the, you know, Notre Dame or St. Peter's or the like. So it's a human idea. I'm going to use my estate to further whatever my ideology is. So you just got to decide, what are your values, right? And I believe in the logic of laser eyes. If you're lucky enough to have one mission in your life and have any modicum of success, then you should count yourself fortunate, right? You're probably luckier than the great majority of the vast majority of people that ever lived. The world's full of people that were successful at one thing, but then they actually picked a second, a third, or a fourth thing. And when you pick the second, the third, or the fourth thing, you kind of destroy your legacy, or you dilute it, right? At the very least, or distract it. You built a business your entire life. You give it to your idiot son, the derelict, and he bankrupts the company. Was there anything honorable about that? Like, if you really love the company, you don't leave it to your idiot son. You leave it to the most qualified employee. You know, you pick the one out of a million people that's going to actually protect the customer, protect the investors, protect the employees, improve the product. Right. So in this particular case, you got to kind of consider, is your ego getting in the way of pursuing your interests or not?
When it comes to time or conviction, not everyone is in agreement. The analyst Scott Melchor caused a stir when he stated that some of the original Bitcoin whales are losing faith and selling their holdings as Bitcoin expands its relationship with institutions that it had previously opposed. In spite of the fact that he did not agree with the viewpoint, it elicited a furious response. It was stated by critics such as Mike Alfred that sales are not a reflection of disenchantment, but rather of life changes, diversification, or estate planning. Willy Woo moved into infrastructure, while Plan B moved into exchange-traded funds ETFs for simpler exposure. Other well-known personalities took different positions as well. It was brought to everyone's attention during the conversation that selling Bitcoin does not necessarily mean giving up hope for its future.
Well, there are good companies and bad companies, right? So if I give you a company making $100 million a year and they adopt Bitcoin and they start buying $100 million worth of Bitcoin, they'll be 10x better. If they borrow $1 billion, they'll be 100x better. If they manage to launch in a two market, they'll be 1,000x better. If they screw it up, they won't. If I give you a company that's losing $100 million a year and they announce that they're adopting a Bitcoin standard, no one's going to give them any money. Maybe they don't have any Bitcoin. So the point is, putting out a press release doesn't solve your problem.
Yeah.
So in that particular case, if the company's got $1 billion of debt, losing $100 million a year, putting out a press release announcing that you adopted the Bitcoin treasury model doesn't help you, right?
Yeah, absolutely.
Right. If I take a bad company, if I take a bad P&L and I attach a good balance sheet, eventually I burn all the money on the balance sheet. Like, would you invest $500 million of Bitcoin into a company losing $100 million a year that intended to keep losing it? Probably not, right? So the thing about this market is the Bitcoin treasury company movement is traditional companies trading in the public markets that have adopted the Bitcoin standard. It's not crypto companies. So it's impossible for them to actually generate or take on the leverage the crypto companies took over. The crypto companies were levered 20 to 1, 30 to 1, 50 to 1. It was very common in the crypto in the height of the crypto era, people would give you $1 billion loan for 800 million of yo-yo token as collateral. Okay. You can't get a loan to buy Bitcoin in the traditional finance market. So for example, I can't sell a bond and so all these Bitcoin treasury companies, they're not getting levered up. They're raising equity. They're not raising debt. The debt markets won't give them capital. So whereas if you look at what created the crypto winter, I was levered up 20 to 1 on FTT token, and then I pledged $1 billion of FTT for some Tether, and then I went and I bought some whatever Luna or something, and you ended up daisy chaining 10x leverage 3 times. You created 1,000x leverage on yo-yo token, and yo-yo token collapses, and the entire thing collapses. You can't do that in traditional finance markets. Like if you can't borrow $1 billion to buy Bitcoin. No one will give you the money. If you had $1 billion of Bitcoin, you can't borrow $1 billion against it.
Mm-hmm.
You can't even lever it 2 to 1. Like my company's levered 1.1, like 1.2. Like, so you might get 10, 20% leverage, maybe 30% leverage. You can't get 10x leverage. And so all of these companies that are being launched are governed by much more conservative financial principles. The thing that bothers us is, let's take the capital markets or the credit markets. You can't get a credit rating. We have stuff that's 10x. We have bonds that are 50x over collateralized, 50 times. We can't get a credit rating on them. Okay, so why would you sit around worrying that these guys are getting over-levered? That's not the problem at all. All the Bitcoin treasury companies can't get over-levered if they wanted to, because the conventional credit markets are so hyper-conservative. They actually value Bitcoin up until right now is worth 0. You can't lever it at all. So who's funding all this? It's equity. And who's behind the convertible bonds? That's equity. For example, when someone buys a $200 million convertible bond from you, they sell $150 million of your equity in order to hedge it. So what you've really got is probably not even 5% leverage in the entire system. Like if you had $100 billion of Bitcoin, you might have $5 billion of something that looks like leverage. That's about all you have.
Oh.
And so there's really not that much there because there's no way to get it. Right? The only way to sell a convertible bond is have so much liquidity in your equity that the convertible arbitrageurs can short the stock, you see. Mm-hmm. So if you don't have liquidity and if you don't have cash flow, then how do you get a Bitcoin treasury company working? And the answer is you have to actually go and find equity investors. You have to find someone that will inject a slug of 100 million, 50 million, 200 million, 500 million of equity. And they might do it in the form of US dollars, or they might do it in the form of euros, or they might give you Bitcoin. But at the end of the day, they're equity investors. And so this entire movement is really the creation of BTC-backed equity. And the reason it works is because if you look at a chart, and we put a chart like this in our Stride presentation about a week ago. Out of about $100 trillion that's under control of institutional money managers where they can reallocate it any given day, 35 trillion is equity, 65 trillion is earmarked for credit. There's only 3 trillion that's invested in something that akin to a commodity. 2.3 trillion of it is gold held by central banks. They're not going to sell their gold to buy Bitcoin or to buy your equity anytime soon. So you've got about $700 billion of money in the institutional market that could be invested in commodities like Bitcoin.
During the course of the discussion, numerous commentators brought up the idea that institutions are necessary for the widespread adoption of Bitcoin. Additionally, CryptoMags reminded everyone that Bitcoin is for everyone of in governments. While Dave Weisberger emphasized that widespread adoption needed the engagement of Wall Street, people like Hogan and others underline that Bitcoin's long-term revolution is still going strong, despite the fact that they have different perspectives on time and motivations. Regardless of whether it is through having cycles, institutional acceptance, or economic developments, the message is unmistakable. Bitcoin's evolution is ongoing, and planning for the next step may be one of the most crucial decisions that investors make.